Hello, good evening, everyone. Welcome to this week's Traders Club. My name is Gerald. All right, so today is the 5th of May, all right, Tuesday. So let's be looking at Singapore stocks. Okay, so now it's 7 p.m. Basically, I'm recording this video to share with you. Okay, now this is STI. All right, so STI, yeah, as you can see, the volatility has dropped somewhat. The prices are not really moving much. But one thing remains the same. The support is still holding. Yeah. So recall that previously we were talking about the 20 MA, 20 days moving average support. Yeah. So you can see it has been holding on since late May, and it continued to test it as a support even when it gapped down on Monday. Yeah. So 20 MA still attracting buying. Besides that, remember there are basically three support levels here, right? So 20 MA is one of them. The other one, of course, would be the gap. Yeah, the gap over here. So the gap has provided that support that it bounced off also near late of May. And last but not least is this resistance turn broken. Yeah, this previous resistance turn broken, resistance broken turn support. Yeah, so all these three support, there's partly the reason why STI is still able to hold up, yeah, above the 2,500 point. Yeah, so today we close at around 2,570, 72. Right, so that is STI. Let's look at individual stocks. I think one stock that we have been looking out for, right, is SGX. Okay, so if you take a look at SGX, we're waiting for it to come to the confluence of support. Okay, so of course this is one support, the 20 and 50 MA. So we are right in trading into the support zone. And besides that, of course, $9.39, that was the previous resistance broken turn support. So the confluence of support levels here. All right, so I think last week we talked about this. So to look for or to time your entry, basically you look out for some trading signal. Yeah, so one of them would be using the MACD, right? So MACD or even stochastic, right? So as of now, there is no indicator signal yet, right? However, of course, some may be looking at this as a inverted hammer candlestick pattern. Yeah, so later when we screen out the ESP master, this stock will pop up again. Yeah, then we can take a look at the entry, stop loss, and profit target. Okay, but by and large, SGX still at support level, right? So it's trying to find buying, right, for the next leg if it happens. All right, so that is for SGX. Last week, with the same breath, we were talking about Sheng Siong, right? So very similar. Sheng Siong and SGX were behaving quite similarly, right? They break out uh, from all the resistances. But Sheng Siong, unlike STI, it has not really come down to the support yet. So I will feel not very comfortable to just take a trade hanging up here. Yeah, so I prefer it to have more of a pullback, right? Especially towards all this support level, like what SGX is trying to do now. Yeah, for the past couple of days. In fact, since last week already. Okay, so that is SGX. Okay, I tell you what, I'll just screen it out now, right? So let me just screen using the ESP master. Then we look at which are the stocks that we can long and which are the stocks that has triggered the shorting signal. All right, so you see SGX popping out as one of them. I'll explain to you how the signal came about, even though MACD has no green bar after a series of red. Okay, so I'm going to screen now. So this is the ESP master. All right, so for those who have subscribed, all right, this is where you can screen the different markets. Okay, so when you click at support, you're basically screening for stocks that has triggered buying signal. Okay, E stands for entry, S stands for stop loss, and P stands for profit target. Right, so what the ESP master will do, it will screen out any stocks that has triggered our buying signal, and will list out where is the entry price, where is the stop loss, and where is the profit target. All right. Okay, so you can see there are a few stocks, right? 4 of them 5 to be precise. Yeah, so SGX is right over there. We'll come to that. So let's take a look at each of them, say Jardine C and C. All right, so for those that the risk and reward is not too attractive, I think I will not discuss further, right? So it's not worth the trade. Okay, I mean, unless you have special interest in that stock or you have no other stocks to look at, then probably you can dwell on it. Okay, but let me move on to look out for the better ones. Okay, so this is Keppel DC. The trend is up, right? Just that we're about 7% away from the high. Yeah, so you can see this $2.55, $2.53 has been a pretty stubborn resistance, right? So we're about 8%, 7% away. Okay, but the stop loss is also about 8% away. Yeah, so probably we want to wait for a breakout. Reverse medical, not good risk and reward, right? So your risk is, your cut loss is 5%. Yeah, your profit, the best 2%. Reverse tone. Okay, so reverse tone is turning uptrend. As you can see, it has turned to has tested support. The 20 MA is now above the 50 MA. That's why we'll just clear this. All right, so okay, so wait for the entry price. Just that, you know, the cut loss is 7%, and of course the recent high is 4%, and the highest point is 130 here, which is 9%. So the risk and reward is actually not as attractive as well. All right. Okay, but this is reverse tone. I think we are trading at historical high. Yeah, we're trading at historical. So again, not too attractive, not something that is jumping out. All right. So let's take a look at the last one, SGX. Okay, so this is SGX. Now, okay, so a few things. Okay, number one, I think just now as we have discussed, probably we've been discussing this for weeks already, right? For waiting for breakout, and after breakout, wait for pullback, and now we're talking about waiting for a buying opportunity now that the pullback has happened. Okay, so a few things. Number one is it has screened out. Okay, but if you look at the MACD and there are no signal, right? So this is one of the rules that we have set, basically based on a candlestick only. Yeah, so we know that it's an uptrend. We know there's support, and we also know there's this inverted hammer pattern. All right, so I think the key is still the entry price, which is $9.66. Okay, so for those who want to wait for the MACD to turn green, then probably you got to wait for the next day or the day after. Okay, but for those who are eager to take this trade, based on the inverted hammer that is sitting on a confluence of support. So the confluence, which is $9.39, which is a previous resistance broken support, as well as the 20 and 50 MA support zone. So for those who want to take that based on the inverted hammer, the entry price is $9.66. So it must go above, right? So today's high was $9.65. Okay, so it must go above $9.66. That will be your confirmation entry price. Okay, so that is the minimum. So if the price doesn't go to $9.66, stay out of it first. Okay. Now the second thing about SGX is okay, the stop loss you can be looking at about only 3%, right? 3.6%. That's your cut loss level, about 930. I look at the profit target. You're looking at 10 to 11%. All right. So I think if you look at the 5 opportunities that the ESP master had triggered, I think the one that stands out is SGX. Yeah, based on the signal itself, based on the support, as well as based on the risk and reward. I think SGX is a stock that we could watch out for. And for those of you who like blue chip, well, this is a blue chip STL component stock. All right, so yeah, SGX, continue to monitor this closely. Okay, so that is for long. Okay, as you can see, not much opportunity. Like I said, it's pretty quiet in the market now. It's like waiting, I think, probably because Dow Jones have some pullback. So the only stocks that probably could be attracting our attention now would be those that has a pickup in volume. Yeah, so volume has never been featured much in trend following strategy. But if you're looking at markets that are quiet, and some are in consolidation phases, waiting for breakout, yeah, I guess that is where change in volume, right? Pick up in volume could shine a spotlight on those stocks. Okay, so I'm going to use another screener now, right? So I'm going to use the XPertTrader. So those of you who have subscribed to the ESP Master, you will have the XPertTrader for free. You can use the volume signal, right? A volume strategy. So just launch the XPertTrader. Okay, so here you can pick the volume increase 30. So basically, it's going to screen out stocks that has the volume for today is 30% higher than previous days. All right, so I'll just screen it. Of course, don't just buy any stock off it because high volume doesn't mean anything. Yeah, so we still need to look at what are the indicators, what are the resistance levels that are broken or threatening to be broken. Okay, so there are about 9 stocks today that the average volume has jumped by at least 30%. So that means today there's an uptick in volume. Okay, let's do further analysis. Okay, I'll minimize it. Okay, first one is Delphi. All right, so you can see the volume has picked up somewhat over the compared to the past couple of days. Okay, okay, but I will not be focusing so much on it because it's basically trading into resistance zone. Yeah, so so it could be anytime the sellers come back in again. Yeah, so these are stocks that even though there's high volume, I want to take a stay aside because we are right at the resistance. Yeah, it's not like it's broken resistance. Okay, so the Delphi, indeed, volume has increased, but no, not looking at it. Okay, so the next one is Fraser's L&I Trust. Okay, so this has a slight uptick in the volume as well. That's the reason why it's screened out. Okay, so for those who are keen in this trade, unlike Delphi, you can see the stock has gone past the 20 and 50 MA resistance. Okay, so I'll just switch back Delphi. You can see the difference. Right, for Delphi, the resistances are still there. Yeah, the price is basically testing the 20 MA and trading into the 20 and 50 MA resistance zone. Okay, whereas for Fraser's R&I, yeah, they are already out of the 50 MA resistance. So probably if you want to take this trade, I think what we can do is use the recent high. Yeah, so the recent high is about $1.06. So if you can continue to trade past 106, yeah, I think that would be a potential trade. Yeah, that could be a potential trade for to go long. All right, stop loss. I think you can set it somewhere beneath the 20 MA. All right. Or basically, you can set below 95 because there are a few instances whereby 95 cents was tested. Yeah, so set below 94, set around 94. So if the price were to come down and hit 94, you have broken the 20 MA and broken this horizontal resistance as well. Okay, but I think it's going to be the risk is going to be more than 10%. Yeah, so either you trade small or you give this a pass. All right. Okay, so this Fraser's R&I. Let's take a look at Franken. Okay, so Franken, look at the volume, definitely more than 3 times what it did the day before yesterday. Right? I mean, more than what it did yesterday. And okay, so previously last week there was also a big volume as well. So I think Franken, take note, and the 20 MA now is past the 50 MA. So it's all trading above the 50 MA now, right? Which he has not been able to do since beginning of the year. Yeah, so since beginning of the year, the 20 and 50 MA has been resisting it even right up to April. Okay, but now things are beginning to change, probably because of the sector, right? This is the technology stocks. AEM, Hy-P, all these guys are running. So Franken as well. Okay, so volume is pick up. So that volume pick up plus price increase. Yeah, so the price has gone up, volume has picked up, price is trading above resistances. Yeah, so yes, this is an interesting counter to look forward to. All right, so how do you trade this? Look at the high again. So we can use this like a trend, momentum trade. So the high is 75 cents. So you could be looking at 76 or 75.5 as a confirmation, which means the price starts to head up to 76, 75.5. Right, that will be a trade. Cut loss, you can set it anywhere below the 20 MA and below all the low here, which is around the 67 cent. All right, so this is Franken. Okay, high P has already started running, yeah. So, but something that even though we may have missed it, right? Something that you can look out for similar pattern, right? There are volume beginning to increase and is trading above the 20 and 50 MA resistances. Okay, so now this is penny counter, volume is not high enough. This one, no. Region culture, too high, too far to run up. SIA volume has picked up, but it's not trading past resistances. It's basically stuck and getting still resisted by the 20 MA. So no go. Okay, Silver Lake axis. All right, interesting to look at. Volume is definitely much higher. Okay, and it has closed above the 50 MA resistance. So same thing. The last time we did that was last year. The last time it went past the 50 MA resistance was last year. After that, it was never able to go past all the resistances until today. Right. So what you can do is set your entry price. Right. You can set it at 20. Okay. There's this high here, so you can set as 29. So let this be a breakout trade. Okay, your stop loss. Of course, if you were to set here, I think definitely this is going to be too huge a risk. And you're looking at 20%. Okay, not worth the type of risk. So let's use the ATR. Yeah, so you can remember previously I was talking about the average true range indicator, 2 times ATR. Okay, so if you take the trade at 29 cents, right, the ATR is 1.5 cent. Yeah, you can see it's 1.5 cent. So twice will be 3 cents. Yeah, so your cut loss, if you enter at 29 cents, your cut loss will be at 26 cents. So that is where it will be more manageable cut loss, right? Using the 2 times ATR. All right, so we can use you can use that as a gauge, right, for Silver Lake axis. Okay, so entry could be 28, half 29, cut loss around 26 cents. That's twice the average daily movement, 2 times ATR. Okay, Silver Lake axis. Okay, now let me move to yeah. So that those are for the volume increase counters. All right, to long. Okay, let me now move to shorting. Okay, so just run it now. Let's see which are those stocks that has triggered a shorting signal. All right, so definitely a handful, right, compared to those that you can long, which are only 5. Right, reason being, of course, we are definitely trading back to resistances. Okay, so again, I'll just look at those that has good risk to reward. Okay, look at CityDev. Okay, so CityDev, let me clear it so you can see better. Yeah, so the entry would be around 775. Let's see, 774, 72. Yeah, there about. But I think I'll prefer to let it go below the 20 MA first. Yeah. Okay, but if that being said, your stop loss will definitely be more than 4%, and your first profit is less than 3%. Okay, so yeah, not too attractive. I want to highlight Keppel Corp. Okay, let's take a look at Keppel Corp. For one simple reason, it is trading now at resistance. Yeah, so you can see. Okay, let me clear it first. Okay, what resistance is the gap resistance? Right, see this gap here? Okay, so it has been testing the gap resistance, tested last week, continue to test this week. not able to go higher. All right, so it's definitely a bearish zone. Yeah, so okay, so if you look at the ESP master for Keppel Corp, yeah, so the entry price is 589, okay, to short. Yeah, then the nearby profit targets are here. Okay, but then again, look at the risk and reward, not too attractive. Yeah, it's not even 1-to-1. Okay, but it's definitely not a bullish area to look at for Keppel Corp. It's a very bearish resistance zone. Let's look at Mapletree Com. Right, so this Mapletree Com, okay, let me clear this. Yeah, so you can see shooting star candlestick pattern. Okay, so your stop loss 10%, but you look at your profit target 13 and 22%. Yeah, so of course, please wait for the confirmation at 192. Right, wait for the market's confirmation. Right, so I guess as far as the risk reward is concerned, Mapletree Trust has a better, more attractive one to look for. All right. Okay, but yeah, so these are the opportunities for today. Yeah, but I guess the one that is focusing more would be SGX, right? As several of you would be as well, right? So look out for either wait for the signal if you are keen on MACD. If not, you can base on this inverted hammer and wait for market confirmation, right? For it to continue the next rally. All right. So with that, thank you very much for the attention. Any question or comment, just leave in the comment section and click like and click following and share the video out to your friends as well. Okay, so thank you very much and we'll see you in the next video.